All right, welcome back to Stock Charts with Nick for this week's breakout and breakdown watch list from April 11th to the 15th. Given the market's in a do or die situation, in today's video we'll cover 5 stocks that have breakout potential and 5 stocks that with breakdown potential. We want to focus on the strongest groups for the stocks that we're going to take long and the weakest group for the stocks that we want to short. And before we get started, this video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the stocks' group strength, fundamentals, and entry points. If you guys want to give MarketSmith a try, there's a link in the description below. And if you guys enjoyed the video, please leave a like and subscribe to my channel. I make this breakout watch list every Sunday and make other trading related videos. Here are each of the setups that we're going to be covering today. Don't want to spend too much time on this slide because we got a lot of charts to go through. Looking at QQQ first to just gauge the general market, you can see we rallied, attempted to hold over the 200-day simple moving average, but the last week or so we've pulled back and now we're sitting right on the 50-day moving average. So if we break through that, there's a larger chance that we test the lows. If we bounce here, then it looks like we're putting in a higher low. So that's why I said earlier that the market's in a do or die situation. So we should have some potential setups both on the long and short sides. We'll start with the long setups. This is CTIC. This is a biotech stock. That group is the 91st strongest out of 197 right now. Group strength rating of B-, but it does have an accumulation distribution rating of B, an overall composite rating of 61. But really the most important thing for me as a swing trader is the relative strength rating of 99, meaning it's outperforming 99% of the stocks in the market right now. It doesn't have any fundamentals, no earnings, sales, or after-tax profit margins to work with. It's not as important in biotechs anyway, but looking within the group of 796 stocks, this is the #1 strongest stock out of that group, and 89th on overall composite rated. Taking a look at fund ownership, we want to see big funds, big money flowing into the stock, and it doesn't have too much of that. It's kind of holding steady between 40 and 25 here, sitting at 39 in March of 2022. Looking at the stock fundamentally, we did see a nice breakout from this $2.34 range all the way up to $5.25. Since then, we had a shakeout back under to around $4.12 was the low here. And since then, we bounced and we're tightening up the last 4 trading days, looking at a potential buy with a break over $5, managing our risk with a stop under the 21 EMA around 474. That's about a 5% stop. If you, depending on your trading style, you might need a little bit tighter of a stop, so you're waiting for that break and then using the low of the day as your stop. But 5% for me, I'm not going to be taking a very large position because biotech stocks are very, very volatile. They can gap down pretty heavy the next day. So I never want to put too much position size on a biotech stock. So with that in mind, a 5% stop is not too bad there. Next, we have an oil and gas name, GLNG. That group specifically is the 19th strongest out of 197, but energy, gas, that has been a theme that's been working in the market lately. It's got A group strength rating, an A+ accumulation distribution, meaning many of the large volume days come on up days versus down days. The stock's getting accumulated, not sold off. It's got an overall composite rating of 86, individual relative strength rating of 99. Taking a look within the group of 55 stocks, it's #1 on relative strength, #1 on accumulation distribution, and middle of the road in composite overall rating, 28th out of 55. Taking a look at fund ownership, that has been steadily increasing from June of 2021 at 187 to 234 now. Looking quickly at the fundamentals, earnings per share, we had a couple negative quarters, but most recently we had a 50% growth year over year, -3% on sales, and then an improvement of 6% on after-tax profit margins. Now jumping to the chart, this had a low of 1079, let's see what day this was, in December. Since then, this was a nice long base to work with. It attempted to break out, kind of pulled back under 15, and this was really the day you wanted to get involved in the stock. Since then, it did get extended to 25, but this is going to be a shorter term trade. Again, we're looking at the theme, oil and gas, that's working very well. We peaked on April 1st at 26.23. Since then, we've been pulling back on lighter than average volume. You can see the 50-day average volume here, and you can see the pullback has been on lighter than average volume. Finding support at that 8-day EMA, which is rising, closed 1 day right on that, and now we've built under the $25 pivot area here. Friday's high was $24.99, so we're looking for a break over 25 as a potential entry. Next, we have Lululemons. This was a stock that I tried on Thursday, got stopped out for a couple pennies above my break-even price on Friday, but it is really setting up. So if the market does find support going into next week, this is a stock that I want to have major focus on. It's retail apparel shoes, Not a very strong group in itself, D rating there, but it has an accumulation distribution rating of A-, a 93 overall composite rating, and a 78 individual relative strength rating. That's a little bit smaller than we'd like, but I'll cover why it's not as important to me in a second here. Within the group of 34 stocks, it's rated third on earnings per share, third on relative strength, second on accumulation distribution, and number 1 overall composite. Taking a look at fund ownership, that has been steadily increasing up until March of 2022. Those numbers just came out. But we rose from, 1580 in June of 2020 to 1754 of March of 2022. We did get this high volume breakout on the earnings, which is something that I always look for as a potential trade setup. And that came after March, that came after the March numbers came out, I believe. I'll have to check on that. But taking a look at the fundamentals, earnings per share were up 404%, then 123, 40, and 31. So we're still improving, but at a decelerating rate. Sales are up 88, 61, 30, and 23% year over year for each of the last 4 quarters. And after-tax profit margins improving 13, 15, 15, and 21%. So this high volume breakout on earnings here really caught my attention. This was the highest volume since the previous earnings. I believe it might have been highest volume of the year as well. Either way, while the market was pulling back, this really got going forward. You can see the 200-day simple moving average, this black line, held as resistance once and twice here on, what day was this? On April 4th. Since then, we pulled back in, and I actually tried to buy this over 375 on Thursday. It got out a little bit, nice strong closing range, but with the overall general market pressure, we pulled back a little bit on Friday. I don't believe we took out the low. 368.76, 369. So we didn't take out the low on Thursday, from Thursday. That's a good sign of relative strength. We're still above the rising 8-day EMA, and this is flagging out very nicely. So looking for market conditions. If market conditions improve and this breaks over Friday's high of 378.22, maybe just try it again at 375 and use the stop at Friday's low, 369.08. Got 2 more on the long side. This one is MDRX. This is in computer software medical, 138th strongest group out of 197. So that's a C- group strength rating, A- on accumulation distribution, 90 overall composite, and that relative strength individual that I look at, 96. That is awesome to see there. Within the group of 35 stocks, it's number 1 on relative strength and number 1 on overall composite basis. Fund ownership has been steadily increasing from 451 in March of 2021 to 483 this March. You can see this is really fighting the trend of the general market. So as the market was pulling back, this was actually pressing into new all-time highs. It did eventually pull back to the 50-day moving average, but that area held as support. And then we put in higher highs, higher lows, higher highs, and this is really tightening up on declining volume here. So while the market was pulling back, this actually was up 0.6% on the day on a little bit heavier volume than the previous day, which was a pullback day, but still held the rising 8-day EMA. Very nice tight action on both volume and price in a strong stock, showing relative strength with very strong fundamentals. Let's cover that in a second. Earnings per share up 850, 35, 145, and 295 year over year. Sales went from -3 to +1, +1, and +1. And after-tax profit margin improving really drastically the last quarter, 25% year over year. So for MDRX, we're looking for a break over Friday's high, $22.95, call it $23, and maybe a stop under Wednesday's low, which was $22.37. Last stock that we have from the long side is STLD. This is a steel producer. That's the 7th strongest group out of 197 in the market. So that's an A+ group strength rating, has an A- accumulation distribution, 98 overall composite, individual relative strength rating of 96. Very, very strong fundamentals. Earnings per share were up 140, 625, 875, and 500% year over year. Sales are improving 38%, 113, 118, and 104. And after-tax profit margins also accelerating 13%, 16%, 20%, and 22%. Within the group of 16 stocks, it's number 1 on earnings per share, number 7 on relative strength. That just shows you how strong the group is. If the individual relative strength is 96, and that's only halfway through that group, that means we were identifying a very strong group to be trading in right now. It's got an accumulation distribution, 3rd out of 16, and overall composite rated 3rd out of 16. Fund ownership on this stock has also been improving from 1347 last March to 1605 this March. The stock did find its low in January 24th, just above $50 at $50.54. Nice to see that round number is respected even after we're undercutting the previous low, shaking out the weaker hands. Really nice setup in here. This would have been the ideal buy point. I did not get in there. We also had another pullback and then kind of consolidated at that 21 EMA, got going again. Could not break 90, that's fine. That's a nice extension for a steel name. Since then, we're pulling back on less than average volume, bounced right around $80, and really consolidating nicely here. So a couple more candles where we pull back into the rising 21 EMA, that would allow us to get in at a lower price with still managing our risk against $80. Otherwise, we're looking for a break over Friday's high, 84.69, and then using either Friday's low as our stop, 82.81, or if you're taking a very smaller or a much smaller size position and using a wider stop, you could use 79.99, 79.98 as your stop there for STLD. Now for the stocks on the potential short list, we have BILL. This is in computer software financial, 136 out of 197. So again, we're looking at the flip side. We want weak groups, weak stocks in those groups with declining fundamentals and that are below all their key moving averages. So weak group, C- group strength rating, D+ accumulation distribution, so that's good for us on the short side. Composite rating of 42, relative strength rating of 74. Within the group, it is strong compared to most of the stocks. It's 5th strongest out of 41. But this is setting up nicely just above 200. So you see the low of the day on Fridays was 199.72. Ideally, we see a kind of a bounce into the 50-day, the 8-day, and the 21-day EMA all around 220. So if the market conditions improve come Monday, the stock does find support at 200, bounces into that 220 area. That would be the ideal point to put on a short position because you have a previous area of congestion that would you would see some selling pressure there. You also have all those key moving averages that would provide kind of some selling overhead resistance there. But if we just fall through the ground on Monday, a break under 200, nice round number to manage your risk against using a stop above Friday's high, 207.41 there for BILL. Next, we have Bumble, BMBL. This was a stock that I tried to trade on the long side a couple times as it was consolidating above all their key moving averages after a high volume close here. It had the high volume close at 23.64. That's about 8% above where the stock is trading at now. So after this failed as at 30 once, twice, 3 times, it failed breaking over 30 after it was setting up that really nice pivot. Now my brain has to switch saying, okay, if I'm trying to trade this from the long side, I'm wrong. So mine as well tried to think of this as a potential short stock. So we pull back into the 50-day moving average, and we actually close under that area on Friday, closing at 25.78, closing under $26. The 50-day moving average is 26.31, so it's about 2% below the 50-day moving average. You can see with MarketSmith. I love that it does that. You can see where it's at in relation to the 8-day, the 21, the 50, and the 200-day moving average. So what I want to see out of Bumble, again, if the market conditions improve, we bounce up into this $27 area. Then you have the 8 and the 21-day EMA. Also, you would have Thursday's high, which was 27.68 to manage your risk against. Or if the market just kind of pulls back, continues to sell off on Monday, then breaking under the low, 25.70 is your potential entry point for BMBL. It's in a very weak group, D+ internet content, 144 out of 197. Accumulation distribution, B, overall composite 31, relative strength rating 13, weak stock, weak group, under all the key moving averages, failed a nice breakout potential setup here at 30. So now we're adding probability to the short side with Bumble. Next, we have AFRM Holdings. This is in finance credit card payments, 158 out of 197, very weak group. That's a D group strength rating, B- accumulation distribution, overall composite rating of 6, individual relative strength rating of 6, very weak there. Within the group, it's 37th out of 40 on relative strengths, 39th out of 40 on composite, so weak stock and a weak group with declining fund ownership. It was really nice to trade in September. I traded this a couple times on the long side, but since this failed breakout at 176, here. We broke under the 50-day moving average, and it's been kind of basically a straight shot down. Found some support at 26, bounced up into the 50-day moving average, but really, once the market was extended, this got extended around the 50-day, and it did start rolling here. If the market conditions improve, we have $40 as a potential pivot. We're at $37.58 right now, so a break into that $40 area. We can manage our risk against Thursday's high, $41.69, or if market conditions just kind of fall apart, then a break under Friday's low, $37.30 is your potential entry there. Ideally, I do want to see the market bounce on Monday so we can get a better short opportunity into that $40 area. In that situation, I could put much larger position size on and manage my risk accordingly. If we just fall apart on Monday, I'm not going to be putting as large a position size because we're already extended 10% from the 8-day EMA, 11% from the 21, and 15% from the 50-day. So we do want to see a little bit of a bounce to improve our trade probabilities with AFRM. Next, we have another kind of finance stock, Upstart. It's in finance consumer loans, 155 out of 197, D group strength rating. It's got a B- accumulation distribution, 47th composite, and 16 individual relative strength rating. If you take a look at my Twitter account, Stock Trick Nick, I did post this chart, but inverted and said, would you buy the stock? And everyone was like, yeah, this is a great setup to buy on the long side. But the trick was it was inverted, so that makes it a good short setup on, or a good setup on the short side. So within the group of 27 stocks, it's 21st on relative strength, so on the weaker end there, 14th on composite basis. It does have incredible fundamentals. Earnings per share were up 340, over 1,000, 250, over 1,000 year over year. Sales improving 90, over 1,000%, plus 250, plus 255, and after-tax profit margin had been improving as well. But fund ownership starting to steady out here from 576 to 607. Typically, a stock peaks well before the price of the stock peaks well before fund ownership does as well. And we're only looking at this as swing trade. So can this be a stock, a monster stock that puts in new highs? Sure. But to do that, it's going to have to break over our stop loss if we're on the short side. So similar to AFRM, if we're looking at a bounce on Monday, we have this $100 nice round number area along with the 8-day EMA, which is at 101.92 right now. That'll be closer to $100 come Monday to manage our risk against. So ideally, we do bounce on Monday, kind of find some resistance at 100 or break over at 100, and then I want to be putting on the short as it comes back through 100, showing that there's no buying support at that area when market pressure does start to come back on the downside. And the last stock on the short side is Roblox RBLX, another name that I had great success trading in November of 2021. Nice pop on heavy volume, continued up to 140 from the $100 area. But since then, tech names have been getting hit hard, especially tech names with some weaker fundamentals, which, I mean, this had strong earnings per share growth, strong sales growth, but after-tax profit margin in December, negative 25%. And we had negative earnings, minus 25 cents per share there. That's a little bit of a red flag. Let's check some fund ownership. That is actually declining from 634 in December of 2021 to 593 this December. And within the group of 22 stocks, again, weak group, D- group strength, 169 out of 197. It is 17th strongest on relative strength based out of 22, so on the weaker side there, and 16th out of 22 on a composite basis. With this, if we rally on Monday into that $45 area, you have the 21 EMA and the 8-day EMA. The market just falls apart. We're looking for a break under the lows, 42.77 or 42.55, the low from Thursday. This is a stock that when we're looking for stocks to short, we want to see stocks that didn't rally above all of their key moving averages when the market was just ripping higher the previous 3 weeks. You can see we rallied from 36 to 53, which in itself is a really nice rally, tradable rally if you wanted to trade that. I didn't. But it never even cleared the 50-day moving average, never even got close to the 200-day simple moving average. So this is a stock that even though it rallied, it only had 2 days rallying where it closed up on above average volume, and now we're starting to see it wilt along with market pressure. All right, that's gonna be the breakout and breakdown watch list of the week. If you guys enjoyed the video, please leave a like and subscribe to my channel. Big thanks to the sponsor MarketSmith, which was the trading platform that we were using to break down each of the setups. If you guys want to give MarketSmith a try, there's a link in the description below. Have a great week, and I'll see you guys next time.